What's going on, everybody? This is the blockchain backer bringing you the latest cryptocurrency news and analysis. Today, we have another green day here in the cryptocurrency market with the altcoin market breaking through the daily candle close that held us up for over a year and a half. We've now gotten our way back through here on the altcoin market, along with Ethereum able to close that yesterday and continuing higher today, while Bitcoin takes a stab at a new high compared to back on July 30th. And as the stock market and the Dow Jones Industrial Average continues its breakout of its downward channel that it's been in for 8 months. And I saw Raoul Pal post this over here on Twitter. Well, this appears to be one of the most hated rallies I've seen in quite a few years in equities. Probably has quite a bit more to go, path of most pain, and a very decent chance the low was in June. And I completely agree with that. When I go on Twitter, it is still just bears trying to make the case for the bear argument as much as possible. Trying to dissect the CPI print that came out yesterday, trying to present every case on why equities need to go down. And there's no question, this is a disbelief rally. There's a ton of people on the sidelines still screaming at the top of their lungs, prices have to come down. As we know yesterday, the Dow Jones not only got out of trend, but also took out a high set back there back on June 1st. We're now seeing the highest prices over here in the Dow Jones since May 5th. And it's definitely a treat to see that we were able to close yesterday's candle close for Ethereum and for the altcoin market above that level that we've been kind of monitoring for about a week right now. But there's something to be said about all this sentiment that still is out there of people screaming that the prices have to come down. There's still bears out there. It tells you that we're not only in a disbelief rally, but that there's still a tremendous amount of people who are sitting on the sidelines with cash. They have not capitulated back into the market, right? You can capitulate in either direction. You capitulate at the bottom by selling, or you can capitulate at the top by buying in. But that there's a ton of money still sitting on the sideline right now. And not only that, there's a ton of money still trying to short this market. So the higher it goes, the more they're shorting. So it creates this scenario of a short squeeze and at the same time, a ton of money sitting on the sidelines. So in an upward move like this, seeing so many people be bearish at the same time, it's what you want to see. Just go back and think about the last, however long you've been in this market. You've been in this market for a year, you've been in it for 6 months, you've been in it for 5 years. Whenever euphoria is hitting and whenever extreme excitement and extreme optimism is coming and everybody is in agreement that prices are going to go higher, what is that? That's the top. Every time. We're nowhere near that type of sentiment. That, of course, can you take that and say that's going to be the determining factor of where the top is? No. But if you're looking at it from a sentiment perspective, we have a tremendous amount of people out there who are bears, a tremendous amount of people who are shorting, a tremendous amount of people who are on the sidelines and screaming disbelief, suckers rally, all that kind of stuff. And I've told the story of, we don't know if this is what Ethereum is following, but I've told the story of what it was like for me with Bitcoin when it did this back in 2017. That when Bitcoin did this in 2017, I was just like that, man. I had sold out in here. I was convinced that the market was going to go lower. We fell one more time. I was so proud of myself. I said I did things right. The market started coming back up. I was like, okay, all right, whatever. It's just a bounce. Prices moved back up into here. And I still said to myself, there's no way it's going to keep going. There's no way it's going to keep going. I sat on my hands, tried to be tough. What happened? Boom, it whacked all the way up there. And then that's when it was just apparent, wait a minute, that's absolutely nothing like what appeared was happening here in the market. This is back in the summer of 2017. Hard to believe this is over 5 years ago. And here we are currently in 2022 with a much bigger time frame, same kind of structure, same type of sentiment. We're bouncing in here. We're at this phase. I remember it. If it's the same thing, right? I remember this phase. And then suddenly there's just a big move up that ends up coming. That's what we were talking about earlier this week. If there is one, that there's all these gaps in here of just wide open space that every time we've gone through these, it just flies through it. And that the capitulation of the bears is likely somewhere up in here if the structure remains true. And so the point of me doing this is not to actually pick on people who are bears. I'm sure there's going to be somebody listening to this who says, no, this is going to turn over. And I understand where you're coming from. I'm not here to pick on you in particular. This is just what I do when I look at the general sentiment of the entire market. What is the collective opinion of the market? And it's that there's still a tremendous amount of bears out there. And as we were watching for weeks, if not months, we're monitoring here the 200-week moving average here on the Dow Jones and the stock market, in that we were needing to hold these levels. And we can see the Dow has gotten a very substantial bounce off of there. So the question comes, how high is this thing going to go? Because it's already retraced almost 50% of this entire move. It's actually done more than 50% of a retracement at this point right now, right? So where are we getting to, right? The 702 retracement isn't very far away in here. So we've already taken back over 50% of the entire fall here, moving backward and back up. Now, the big question is, will it get stopped out and then roll itself over and we start the Great Depression? Or does it go off and go on to set new all-time highs because the Dow Jones has come up short of the 4.236 extension? And this is actually just the first initial profit take that's happening in here after continuing its parabola, bouncing off the 200-week moving average and the high set back in February of 2020. So if we kind of talk about what happens in structures like this for when tops are coming in, if we were to say, hey, there's a potential that the top is coming in, I'll put that back on there. The way a lot of these things work is we get back up into these retracement levels, pulling back up in here, and we pull back down, and we go off, and then we reach up to it with these three waves. But you can kind of imagine what life would be like in that moment. If the Dow Jones got back up in here, this is typically the capitulation level. This is where most people will come back into the market and say, you know what? We've gone too far. We've already retraced 70% of the entire fall. We'll take all this off the screen. Let's draw a line on that and show what that would look like right there. Turn that and make that thing look a little bit more green in there. If you had something like that, it would look very different than what people would expect to be actual crashing. You get back into retracement levels in here. You get that big line. Pretty much the whole fall has been taken back at this point. We're then only a mere percentage points, 4 percentage points off of the all-time high at that point. That's not like what would be an actual crash, right? But with topping structures, if we're going off to reach the 4.236 extension, the most common thing is you roll up here into the retracement levels, pull back down to these price levels in here, roll up one more time for a new little high. One more attempt. What do we have happening in here? We end up reaching off to our 4.236 extension, kissing it, and then lights out. So currently right now, that's my thesis of the market. And something like this would likely be positive for the cryptocurrency market. But of course, the biggest thing happening here is going to be when we get back to the retracement levels, because it's going to tell us that, hey, it's most likely going to find some serious resistance here in the retracement levels in here, and it's going to likely pull back. Then it becomes the whole question of, what if you're wrong, right? What if you're wrong? What if this thing isn't going to go set new all-time highs, but this is just a retracement leg before it turns over and goes down? And that's the decision that everybody's going to have to make on their own, if we even get there. But that's the common thing for retracements, right? You start your first initial crash, you go back into retracement levels, and then you continue crashing. So for those who stuck with this channel through this entire hardship that we've gone through here in markets, we're about to start changing the things that we've been talking about. Spent a long time talking about the 200-week moving average and a long time about the February of 2020 high holding us and that being our low in order to continue a parabola. We are now so far back up now, being above 50%, that we're beyond talking about that anymore. And we're now moving on to a different phase of what we're talking about with the market. And now it comes back to talking about retracement levels and whether or not we're going to get stopped out by these things. And if we do, what is it going to look like? This was the bottom. Bottom is gone. Now we're approaching a new phase of the market. And this is the phase where a lot of the bears are going to capitulate back into the market in here. But I've also spent years showing how retracements can be the rejection levels. They can be the places where the market turns over from here. And when we get back into retracements, my opinion doesn't matter. If I think we're going to break through them or if I think we're going to get rejected by them, it doesn't matter. The market is just going to do what it's going to do from the actual retracement levels. Either this is a complete bear market in the stock market and it's going to roll over from here and we're going off into the Great Depression in here, or this thing is just the initial profit take and breaking through. And I don't have a way to know. The only thing I can do is say, hey, we haven't hit a 4.236 extension for the entire Dow Jones. That's odd. The NASDAQ as well has not hit it. Both of them got above the 3.618 extensions, but neither of them got to the 4.236. We didn't have any type of initial profit taking happen in the market, which, like we saw with Bitcoin, there was initial profit taking and then it started rolling over and heading down. Then one more push. This was a massive profit take. All the on-chain data shows that this was a massive profit take from all the whales and then the final extension. And the same thing goes for Ethereum, right? the first initial profit take, then the final extension, and then rolling over. We look at the NASDAQ, there is no initial profit take that's happened here unless this was it. It got just above the 3.618 extension, not quite getting to the 4.236, which we know was the case for Ethereum, above the 3.618, pulls down, final extension to 4.236 extension, lights out. We just don't have that initial profit taking. But even this right here, this final ending right in here, very similar to what happens in the first initial profit take rally. That eventually finishes. But, right? I'm not going to sit here and say, we just ignore the retracements. You see the bubble. You see that this has been a sharp rally. You see what happened back in the .com bubble. There was no profit take that happened in there. But then it went back into a retracement rally and then it rolled over, right? So as you get back here into retracements, where you're going to have the bears all capitulate back in to become bulls, that's there, man. Look back to the .com bubble and what happened in there. How high did it end up going? It ended up getting back to the 0.618 retracement level in here and then rolled over on itself at that point too. So as we get back into these things, we know how high the market is, and the market participants are having to make the guess in here of, is this going to just be a retracement that ultimately leads to the Great Depression happening in here? Or is this the first initial profit take that has happened in here that is actually going to go off and finally hit that 4.236 extension? That's the phase we've moved from, or moved to. Sitting here talking about the bottom holding in here on the 200-week moving average, talking about it holding on top of the February 2020 high, we're beyond that. We've gone so far, we're over 50% retraced of the entire move. That moment in time is now officially gone. The bottom is in. Now you have a bunch of other complications that come in here on this retracement to say, where does it stop out in the retracement and what happens after the retracement? You have a million things that you can have happen in here. If you're sitting here, let's say we're ABC correcting in here. What's a common ABC correction that can happen here is that you can pause out at the 0.618, then you can pull all the way back below the 236, then you go on and hit the 702, and then it's lights out after that. That's the common ABC structure. Then question is, do we just kind of meander here and pause at 702 and then break down like that? Do we hit the 702 and then pull back and then pull up and break out? Again, this moment's behind us. We don't care about this moment anymore. We are now focused on this. And the reason why it's so important to talk about this, and I get it, we talk about crypto a lot on here, and like the last couple of weeks, I've been trying to make more focused videos on certain things, and we're kind of bouncing around in this one, and we're talking a lot about the stock market in here, but there's a legitimate reason why, and it's because when we get back into these retracement levels, that is where the sentiment is going to change. That is where the bears are going to turn back into bulls. That is where they're going to give up on shorting the market, and the sentiment will change and they will capitulate back in. But what typically happens is that we do find resistances in these areas right in here. And the big question is whether or not we're breaking through them to go hit the 4.236 extension, or if this is the return to normal rally. This is just a retracement rally, and that it's going to turn over on itself from right here. And we have officially popped the US stock market. That's the phase we're in right now. So a lot of people will have sold down in here. They're wanting to know what to do right in here now that it has been invalidated that we're going on to set lower lows, because what have we done? We've set a higher high at this point. Now we're going back to retracements, and what happens here? The pain has gotten too bad, right? The pain trade right now, which you can clearly see on Twitter, is up. Up is the pain trade. I talked about it a week ago. I saw a poll that was conducted on what they thought was going to happen with markets. 72% of market participants believed that we were going to set new additional lows, that we were going to take out the 200-week moving average, that we were going to take out the top there in February 2020. We know the vast majority of participants are in disbelief right now. But when we get back up in here, history always shows it. Always. When we get back into the retracement levels, that changes. FOMO kicks in, excitement kicks in, and bear capitulation kicks in. But we know the problems that are coming up here when we get to here. This is the big question of whether or not we're rolling over from here. So be prepared. That's going to be the direction things are going to be moving in now. It is no longer going to be about talking about new lows. And that's a challenge for my channel too. My channel, I've always kind of talked a lot about I'm pretty much looking for reversals and being on the opposite spectrum of what the general public is. And that can actually be difficult for growing your channel when you're not on the exact same sideline that everybody is at the same time. If you would have paid attention on Twitter for the last couple of months, bear posting got incredible amounts of engagement. Creating bear videos were going to go down. Those got tons of views and engagement, and that's what people wanted to see. That's also the same thing they wanted to see at the absolute top. But at the very top of saying, we're not going to $100,000 for Bitcoin. And down here at the lows, presenting all the cases on why the bottom needs to be coming in down in here. So what's going to happen? People are going to want their sentiment massaged. They're going to want to feel good about what they're doing and that, hey, they sold the bottom, but they're feeling the pain. They want to get back in. They're going to be searching for bullish content. Well, here we go. We've been bullish down here at the bottom to say it's got to hold down here. It's got to break from here. Now we're getting back to time to be cautious again. I'm not sure what's going to happen here at the retracement levels. If I can make my best guess would be that we're going to probably find resistance in here for a few months on the stock market that will eventually lead to setting the new all-time high, hitting the 4.236 extension. But at the same time, I'm very well aware that we can get rejected at retracement levels. So extreme caution will be getting exercised in here while we're waiting to see how this moment plays out. And so here we are 16 minutes into this video. You're probably thinking, dude, I'm tuning in for crypto coverage, bro. That is enough stock market coverage for today. But the reason why is because if we are tied to the stock market and if we have seen the pop actually happen in crypto, right? And if Ethereum isn't following this, right? Well, it's followed it beautifully. It's, popping up just like it should be doing. It ran its entire run up in here. Hey, this thing points to just like massive bull run coming for Ethereum. The big problem at the same time is that we know we've set higher highs and this is our official first lower low. So what happens when the market starts running back up and we start getting back into retracement levels? It becomes the same thing over here in crypto, that I'm going to be exercising caution as we get back into all of these retracement levels here in the cryptocurrency market as well. So as we get back into these areas in here, so long as we do end up getting it, fingers crossed, these are areas where I have to take profit on the market, because while I want the market to run, while I want this to be true, and while I want the Dow Jones to go on to hit a 4.236 extension, I do know that we've gone through a massive bull run in the cryptocurrency market in 2020 and 2021, and that we're now officially in retracements. And in retracements, it's very common that the market rolls over from there. And so we're finally getting near that phase. If we end up getting this, right? If the Ethereum price chart, if the total altcoin market cap starts getting back up into these price areas right in here, boom, we've got it. We've officially got that retracement finally coming in. And the question will be unknown of whether or not we pause here and roll over, or are we just like getting ready to absolutely skyrocket and go absolutely ludicrous. And my hopes and my beliefs will be that we'll get something like that. But for long-term viewers of this channel, the fact is that we've had this big pull down happen in the cryptocurrency market. We're getting back into the retracements. It should be of literally no surprise to you that that's going to be a major concern for me when we get there. But to those who went through all of it and stayed strong through all of it, congrats. The bottom's in. When you get over 50%, the bottom is in. Now we're officially in the retracement. And now the question is what happens in the retracement. And the reason why there's like kind of like going through and I'm editing this video while I'm also recording it and I'm listening to my tone. There's a lot of seriousness in the tone in here because I've seen this movie way too many times of what happens here. There are still way too many bears out there. Like Raul says, well, this appears to be one of the most hated rallies I've seen in quite a few years in equities. This movie plays out the exact same every single time. We are getting very close to the capitulation level of the bears. And what that means is market sentiment on Twitter, YouTube videos, everywhere will change. We will see bullish content everywhere. And it's not too far away because all that capitulation happens right in here. I've seen this movie 1,000 times. But the cold hard truth that we know is it's just a retracement at this point. Theoretically, if we're going to hit that 4.236 extension, we're going to eventually work our way through it, and we're going to go on and set a new all-time high in the stock market, and that's likely going to be awesome for the cryptocurrency market. But right now, it is just a retracement. We were strong. We were tough. We said, that's got to hold. boom, we have bounced over 50% of the retracement. We've taken back more than 50% of the fall in just a couple of weeks. Bears are in disbelief. It happened way too fast for their comfort level. They don't know what to do. But then we're going to reach a point where it's just too painful. And that's going to be where we're going to really be watching this market with a whole different type of perspective of no longer saying the lows have to hold. This is the area of interest. The lows have to hold. Now it's all about, okay, where's the pause moment? Where's the rejection moment? What happens from here? And really dissecting and analyzing whether or not we're going to roll over from here or we're going to break out. And we've now graduated from trying to look for the bottom. If you're looking for brand new lows to come in here, to say, hey, we have to set one new low, then we get to go up from here. I just don't see that happening here on the chart. You would lose the 200-week moving average. You would lose the February of 2020 high, and you would lose the parabola of the stock market. I don't think it's coming. I think we've confirmed that the bottom is in. Now it's about monitoring. Are we creating a retracement style rally in here, or are we creating something that sets the new all-time high for the 4.236? That's the moment we're in right now. We're no longer caring about the bottom. Bottom's in. And there's one other thing too. So like if we look at the Dow Jones just a little bit closer of like trying to figure out wave counts that have happened in here. And if you say, hey, this is like a 1, 2, 3, 4, 5, then we have a 1, 2, 3, 4, 5. Then essentially we've given ourselves a giant A, B, C correction. Does that make any sense to be having an ABC correction right in here where this is just like the first wave and something much bigger coming out in here where we're like actually doing 1, 2, 3, 4, 5? Because like if the Dow is only going to go into a retracement, or if the Dow is only going to barely set a new all-time high, it becomes hard to imagine something like that happening for Ethereum, where you get some big pump where it goes to like $80,000, right? Where it pulls some Bitcoin move, where Bitcoin went from 3,000 to 70,000. Well, how do we get from 1,000 to 70,000 or $80,000 for Ethereum if that's all you're going to get from the Dow Jones too, right? So that's a challenge I battle with in my own mind as well too, is that I think about that and say, well, how is that going to even be possible if that's what's going to happen in the Dow Jones? We're just going to barely go up and hit a 4.236 extension, but somehow Ethereum is going to pull off one of these magical runs up in here. And I would have to envision that it would be something more along the lines like that for the Dow Jones, and that the 4.236 extension actually isn't the thing that ends up stopping it, and it is going to go much higher. And really the only case I can make for that is that this is actually an ABC correction that is happening in here for the Dow Jones. That was the end of the ABC correction. We know that this isn't a 1, 2, 3, 4, 5, because, well, bottom of wave one's way down here. We should not have gotten past the bottom of wave one way down here for Elliott wave theory, especially, I mean, maybe if we, sometimes you can wick above it and then turn your way back down and go on and have your fifth wave, but you don't come up here and just break through wave one and then just keep on marching and then eventually have five. It's showing much more similarities as to what an ABC correction actually looks like in here for the Dow Jones Industrial Average. And like if there is actually some massive melt up where the Dow Jones is going to go significantly higher from where it currently is right now, is there any precedent on this type of structure to do something like that, where this thing is actually still going to keep on cranking up much higher? And essentially the phase of the market where we would need to be right now for the Dow Jones Industrial Average being in here for like an example of Bitcoin is that we were actually just in a phase like this right here. And that we kind of had some initial run-ups happening in here before finally it comes up and does its double tap, which is what we saw over here for Bitcoin. A couple of runs up before having its double tap. Then what happens? You have your breakout back test, violent back test with your V bottom here into the double tap, which is what we also had happen over here in the stock market, right? Our breakout with our violent pullback into our double tap back in here. And that this kind of being a violent ABC is similar to our violent ABC back in here, and that there was still more excessiveness that came out of the bubble for Bitcoin afterwards. And that's the phase at which we would be in here currently for the Dow Jones, and that we have not created absolute euphoria in excess. And that, it makes sense that here we are, we're only a mere percentage points off of the all-time high, and everybody's really bearish, right? That's what happens. Everybody still stays bearish the whole way up. It's not until everybody's completely capitulated on their bearishness that the tops eventually end up coming in. And I've always found it so odd that, most retail investors have believed that they have sold the top of the US stock market because, hey, when you zoom in on it like this, oh, this thing's definitely a bubble, right? But we could have done that here for Bitcoin along at this point too, to say that this was absolutely a bubble and that was the ending phase in there. But when you zoom in on this as well, what did we have? We had an ABC correction coming in here. And based on the wave count, that still seems to be what we could have happening here in the Dow Jones. So it's like, if we're thinking about like there's this chance that Ethereum somehow goes on that magical, mystical ride of zooming way up, and you'd think a lot of the cryptocurrency market would go on that insane ride with it as well, it would be that we are still a long ways away from the Dow Jones Industrial Average completely popping, and that the C19 sell-off was our double tap, bull flag, breakout, backtest, V bottom, just as we had for Bitcoin in the earlier phases of the double tap, breakout, backtest, V bottom, first major ABC, and this thing still has a lot of room left to rock and roll and get incredibly parabolic. But that's for another day. Just know I still look at that and ponder that occasionally. And even for like Bitcoin down in here, using that same rally to measure out where that area ended up taking place from in there, just shy of the 4.236 extension, just like we have had over here with the Dow Jones Industrial Average at this point as well. Pulling back kind of into the same Fibonacci retracement level areas as well in here too. So yeah, that's for another day. That's a whole another can of hopium that we can open up another day. And that does give a little bit of head scratching to saying, how could this actually end up playing out for Ethereum and for the altcoin market in here without something crazy happening in the stock market? And when you look at it from that perspective, you start kind of scratching your head a little bit too. But either way, those are all bigger picture ideas, abstract ideas. When we zoom in on the moment of what is happening right now in the market, it's that, hey, great news. Ethereum, the altcoin market, they got through the daily candle close areas that we were looking for. Pausing out here is usually typical. Next is going to be about seeing if we can work our way up into the retracement levels for Ethereum, for the altcoin market, and for the stock market in here. And we're no longer sitting here talking about the bottom anymore. So 1, 2, 3, 4, 5's absolutely invalidated. It cannot be a 1, 2, 3, 4, 5 with how high it's gotten back in here. It's totally about focusing on retracement levels now back in here. So I'll work on figuring out how to package that and talk about that a little bit more clear as time goes on in the coming weeks. But the main reason for the serious tone that's happening here in this market right now is we are getting very close to bear capitulation. Still a ton of bears in this market right now. It's the most hated rally out there. My Twitter feed is just loaded with all these people who have been bearish for months and presenting every single reason why you should be bearish. I mean, and making arguments that sound incredibly intellectual. And I'm talking people who are like run hedge funds and, all this kind of stuff. And they're getting stopped out in their short positions. The market is still rising and they're still going at it, trying to present all the bear cases. And you can see retail is still very mad about this, thinking that this thing is going to go back down. And if it's all true, if we are getting up into these areas right in here, this is, and I'm telling you, you're going to see it. You're going to see it. The bulls are going to be back. And they're going to be back in the retracement level. That's where they always show up at. But they've waited a long time to do it. And it's really because the pain has just gotten too bad at this point. But that's where we're at now, guys. I think the bottom is completely confirmed to be in at this point. Now it's about monitoring retracement levels. And this can get a little repetitive. And I know how that goes because I've been doing this long enough. I've been doing this for almost 3 years at this point. I know when we get back to certain levels, every time we're at some type of reversal, it's like, yeah, you're saying the same thing over and over again. Then it plays out, right? And then it's like, oh, wait, that ended up playing out. Now what? And then now we're talking about the new thing. So we're not talking about the February 2020 highs anymore. We're not talking about that stuff. Now we're talking about retracements. So now it becomes more fingernail biting for me. All that stuff that went on in crypto just in general, USDT depegging and then UST and Luna collapsing, Three Arrows Capital, just all that stuff in itself was scary enough in itself. But when it comes to price charts and the things that actually make me uncomfortable and scared on price charts, it's always retracement levels. That doesn't seem to scare the general public. That is the time they want to buy. but we'll spend more time in depth on it. And I'll figure out better ways to talk about it. But with what happened yesterday with the Dow Jones breaking out of its downward trajectory channel, and then it also taking out the June 1st highs, and we're having the highest prices since May 5th, it's very clear. We're over 50%. We're working on retracements now. Now we're going to get back into retracement levels. It's the most hated equity rally that I've seen that I can remember. People did hate the C19 rally. People were not convinced on that until it did take out the February 2020 highs. So I have seen this movie before where people hate it, but it's been a long time since we've seen it like this before, where so many people are on the same side, where they're not in the market and they're screaming for the market to come down. But that will stop soon. When we get into those retracements, that will stop. They will all get back in. Mark my words. I've seen it way too many times. But all right, this video is getting way too long, rambling at this point. I'm going to go ahead and wrap it up. We're in retracements, guys. That's what we're going to be focusing on now. I want to thank you so much for watching. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you could be notified of when I create new content and when I go live. As always, this is not investment advice, and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.